Hi everybody, it's great to be back in Vancouver. I always love visiting Atlantic Canada, and anyway, great to be back in Vancouver. Obviously a very different lifestyle here. It's interesting, I've been just researching supermarkets. Organic shopping is actually massive here. Something like 40% of the population go to organic stores. It hasn't penetrated in Ontario. Very different culture. I want a show of hands. How many people have body piercings other than in their ears? Okay, I'm not getting any volunteers on that one. Okay, I'll be checking later. Okay, so I'll get on with it. It's some of the stuff you've heard before, but in reading research, looking into China, talking to China experts, most of my talk is going to focus on China. I will touch on India, and I will touch on Pakistan, and I will touch on Indonesia, a country we don't talk about enough, population of 250 million people. As you know, China is now at roughly 1.3 billion, India now at 1.1 billion, and growing. I'm going to talk about the crisis we face in commodities, in resources, and my focus will be copper, because copper is the metal that Rio Tinto reckons we have about 30 years of copper left. We may have 40 years of oil left. Of course, you can go down into lower and lower grade resources, which we're doing. But in the lithosphere, there's only so much metal. Unless we start drilling hundreds of kilometers below the Earth's surface, it's going to be very hard to get metal out, and it's getting harder and harder. So that's my theme for you as investors. You really do have the wind at your back because the world is running out of these metals, and even iron ore has broken out of a pattern it was in since the reign of Queen Victoria. We're going to be looking back to taking some long-range charts, courtesy of The Economist magazine, because of course they've been around since the late 19th century. Now let's hope I can work this thing. Now, just by way of background, commodities have been, historically, a rotten, lousy, stinking investment. This is from The Economist. It goes back to the middle of the 19th century, and it's commodity prices in real dollars. You can see it spiked in the First World War. Interestingly, it didn't do the same to the same extent in the Second World War, although there was a major turn-up, of course. But then sliding, you can see the inflationary period in the 70s was good, but there was a relentless slide until roughly 1980, when China started bringing in its reforms in a serious way. China, I left school in 1977, and just the year before that, Mao Zedong died in 1976. The Chinese brought in serious market reforms. I'm going to be talking about the dramatic impact of that. But you can see, since over the past decade, there's been a major turn-up in commodities. There's the dip in the 2008 recession, and there's the recovery in natural resource prices. So you can see there has been a long-term pattern whereby commodities were a terrible investment. We appear to have broken out of that historical trend, but of course we did before, during wars, etc. Here's the same chart. Actually, I just wanted to show you this quote from Dylan Grice. He's a fascinating analyst at Société Générale. He says, innovation has lowered the cost of production. When you buy commodities, you're selling human ingenuity. Now that's his take, because of course human beings have become better and better at producing commodities, cheaper, and also we produce more economic growth using less and less metals. So that's the main reason why commodities have dropped in price. Here's the same chart looked at in another way. You can see commodities have been dead money since 1871. I mean, Queen Victoria came to the throne in 1837, and she reigned till 1901. And let's hope we don't have Prince Charles for that long. But anyway, there is commodities dead money. I'd just like to draw your attention to this, though. This is the S&P 500. Look at that. Look how it was relentless. A decade of dead returns in the US stock market, more than a decade. I think a lot of people would argue that that has a lot to do with the deindustrialization of America, and unfortunately of places like Alberta and Ontario. I mean, Ontario is firmly in the US Rust Belt, but also the fact that America is losing its relative power in the world. You can see that bonds were pretty good, much more predictable, but commodities were dead money until recent years. So is it different this time? Well, I'm just going to show you a couple of charts here. Here's the Chinese oil chart. You can see that they went sometime in the 90s, they went into a position where they had to start importing oil. And look at that. They're going up now. They're almost at 9 million barrels a day. The world pumps something like 84, 85 million barrels of oil a day. So the Chinese are only at around just over 1/10. I mean, their use of oil is still only about half of the United States level, and much less on a per capita basis. And there's their production flatlining. I mean, they do have oil and gas, but they don't have very much. Now, this chart blew me away. This is China's steel production. And that chart goes back, my poor old eyes are having trouble here, back to the late in the last century, the 90s. Look where China was nowhere. Look where it is today. I mean, that just tells you that we're into a new era. And the form of China's modernization has been completely different from what went on with the rest of the Northeast Asian countries, such as Korea, such as Taiwan. Those countries basically adopted the Western model, the neoliberalist model, tried to have as little stuff done by the government as possible. Whereas China really is state-directed capital. The biggest companies all are state companies. They seem to have achieved a very successful blend of government direction, but unleashing private creativity. So this is again the same chart, just showing regular metals, copper, aluminum, and zinc in a long-term downtrend from the early part of the 19th century. Spikes there, First World War, 70s inflationary era. But look at the real iron ore price. That's going back to the 1900s as well. Look at that. Now that, of course, is all about Rio Tinto, Vale, and BHP holding China over a barrel on iron ore prices. And you know how angry the Chinese are about that. They are frantically buying up resources in Africa, in Latin America, to secure their own supplies. They do not like what is happening because they need this steel. They're like junkies. They've got to have it, and junkies will pay whatever it takes. So how far along is China in its development? It really is still a developing country. Now this shows the cost of minerals for each unit of economic output. And you can see China is still using an awful lot of minerals. The post-industrial economies, such as the United States, France, the United Kingdom, are using very, very little. But China is still using an awful lot, and there's still an awful long way to go on this curve before they start having to use so much in the way of raw materials. You see the way China's total imports, about $1 in every $6 went for metals, just metals. Whereas in America, it was $1 in every $50. So China's a very different type of economy. Here is Professor Faruqi is an English prof. She's got a book coming out about Chinese resource nationalism. Her research is fascinating. I was talking to her before this. But she says, essentially, we've got this paradox. We've never seen this before, one of the world's largest economies also being a developing country. So it's very different what's happening now to what's happened throughout history. So what about a China bubble? I mean, the Chinese leader today reiterated that he wants real estate speculation slowed down. We have seen a bit of pressure on copper prices this morning. Is there a bubble? Because we know that crony capitalism is widespread in China. It's enormously corrupt. Typically the heads of the big companies, quasi-private, quasi-public companies, are the kids of Communist Party officials. Now when you get that kind of back-scratching, that kind of corruption, you often do get poor decision making. So we know there has been a lot of poor decision making, ridiculous investment projects in China. So could this thing just bubble up into a froth, and just it turns out they have far too many cities, far too many steel mills. They have enormous overcapacity in some areas. Here's some analysis from a crowd called Dragonomics, and Desjardins hosted a call with them. And here's some of the research from Dragonomics. They reckon that one of the important things to remember about China is that its capital stock is very low, and that's machinery, inventories, real stuff in the economy, not just financial speculation, not housing, just physical stock. It's very low. It's comparable to Japan in the 1970s, and Japan was still growing in the 1970s. I mean, around 1980, people thought in America, Japan is going to take us over. I mean, it sounds so weird. And we do have to set things in perspective. I mean, things are very gloomy now in Europe. The US debt does seem to be spiraling out of control. But people have thought before, oh, the world's coming to an end. You remember Reagan, it's morning in America again. There was a perception at that time, after the Carter presidency, I'm not blaming Carter, that America was finally finished. But America went on to set new records and arguably a house of cards. I mean, of course, Joseph Stiglitz, talking about America, reckons these wars in Iraq and Afghanistan will end up costing around $3 trillion. It's just depressing when you think what America could have done with that $3 trillion in alternative energy, in improving its education system, in rebuilding its inner cities. But I digress, my speculation, my specialty. So could China be a threat? Because we've heard an awful lot about cities being built that are lying empty. And there seems to be evidence that huge residential industrial developments have gone on with no apparent tenants yet. This has happened before. Dragonomics points out that after the Second World War, America knew it had to house the veterans. They built ghost cities. Levittown was a very famous development. Look how humble that house is. It's interesting how in the 50s we've become so greedy and soft and spoiled in recent years. People were happy with a house like that back then. But the demand in China for housing is incredible. Never mind the tens of millions who are moving from the countryside. Just in the among the existing urban households, they need 200 million new homes over the next 2 decades, 10 million homes a year. And that's leaving out the vast hinterland where people really are living in third world conditions. China's debt is generally manageable. I mean, 90% of GDP is a lot, although that's all types of debt, all types of city, municipality, and the municipalities in China have a lot of power. They have power to stimulate economic development. They even get involved with exports, city governments. But it looks as though China's public debt is around 90% of GDP. It's quite a bit, but they have, of course, this enormous cash flow from their massive trade surpluses. And generally, borrowing has been used for productive investment. Unlike America, unfortunately, where it's been used for SUVs or it's been used for military purposes. The role of the military in the US economy, it's got to be examined now. I mean, we got to, around 2008, the crazy situation where America accounted for almost half of the world's military spending, as much military spending as the rest of the world put together. They're going to have to get down off that. Another reason for why China is not probably a threat, they still have enormous numbers of workers in agriculture. I mean, something like 4 or 5% of the Canadian workforce is in agriculture. Look at that, 1/3. Now, China, Japan, South, and Korea didn't have as many, and growth in these countries generally didn't slow until you got down to around 20% of the workforce in farming. That's very high. Remember, developed countries, I think Britain is probably 3 or 4%. They have a very efficient farm sector in Britain. I say efficient, very environmentally damaging, but very large farms in Britain. So it looks as though, based on the Northeast Asian precedents, and that's countries like Korea, Taiwan, and Japan, that by that measure, China can enjoy another 10 years of high-speed growth. They have enormous supplies of low-cost labor still. Now, there is a thing called the middle-income trap, and we all do like to think, and we get sold this myth that, oh, well, generally, countries get richer like that. And there has been enormous progress around the world in reducing infant mortality. We are making progress in giving people cleaner water. Life expectancy around the world, even in quite economically unsuccessful countries, is improving. But countries do get trapped in this middle class income trap. 80% of countries over the past 3 decades that started out poor are still poor. So most countries that were poor, it's very hard to get out of that. And 66%, 2/3, that were middle income 30 years ago are still middle income. So what stage might China be at? Well, growth in Japan started peaking when their GDP per capita hit 75% of the US level. Korea and Taiwan, it occurred sooner, at around 60%, but China is still well back from that level. GDP per head in America, it's always iffy with conversion rates and stuff, but it's about $40,000 a year. China is still at only around 8,000. So the Chinese are a long way from that middle income trap region where growth begins to start slowing. And what about unrest? Now, it does look as though the Chinese have got a tiger by the tail, or a dragon by the tail, the Chinese leadership, in the sense that they can't let growth drop. There's been so much, such heightened expectations among people, especially the people who haven't participated in this boom, that they've got to keep growth up there, 8–9%. But this fascinated me. This is by the Pew Research Center, who are actually kind of a left-wing mob. They don't generally, well, I say left-wing, they're pretty liberal. They, a pretty credible bunch. They've been researching how happy are Chinese people with the country's direction. And in general, it appears pretty darn happy. Because of course the Chinese are an imperial power. We can't forget that. For thousands of years, the other Asian states around them were vassal states. They were tributary states. So the level of humiliation that the Chinese had to go through from the Western powers occupying their cities, and then the brutal occupation by the Japanese, it's left very deep scars. And the Chinese are pretty darn happy that they're finally flexing their muscles, because they, whether their civilization is 5,000 years old, as they like to say, or 3,000 or 4,000 years old, they have a massive history, and a very different history from us in the West. Important thing to remember about Tiananmen Square, it was mostly not about lack of democracy. Yeah, they had that famous replica of the Statue of Liberty, but it was mostly about corruption, and corruption is the big issue with an awful lot of Chinese people. Now, how are you going to judge when and if China slows? I mean, that's almost impossible to do, because we know that the statistics are flawed. We know that there is enormous corruption there. We know that some development has been done simply to line the pockets of local officials. But here's a pretty interesting indicator. It's a thing called the Purchasing Managers Index. It's a measure of Chinese factory output, manufacturing activity. You can see it plunged in late 2008 as the world went into a recession. I mean, Lehman collapsed around here. The stock market, the US stock market bottomed around here. So this was a very brutal recession, out of which America has not fully pulled. I mean, 9% inflation for, unemployment for America is very, very high. For decades, they managed to keep unemployment 4–5%. So America's economy has been damaged, fundamentally damaged by this recession. This time, however, we haven't seen that collapse in the PMI. There was weakness, and it helped bring down the copper price, but it's now turned up. The latest reading we have on the PMI is that Chinese factory production is going up, because we really are self-centered in the West, but only around 20% of China's exports are now going to the United States, maybe slightly less to Europe. So that's about 40% to the rich West. Massive exports now to Africa, to the Middle East, to South Asia. In some ways, we in the West are becoming irrelevant, and we deserve it. It looks good on us, because we've had it pretty soft, sucking cheap labor and sucking resources at low prices out of the poor countries. So it does look, and copper is the great guide. You can see, look at the way copper plunged in 2008. Chinese started buying, and it's now pretty comfortably 340, 350. So what are the Chinese going to do? They have to get resources. Even in copper alone, to build out their electricity grid would take just about all the world's annual copper production. And the lithosphere, of course, is the Earth's crust. There's only so much copper there. They need to get this stuff. Now, the Americans, as we know, overthrew governments, say in Chile, they wanted the copper. They overthrew the Indonesian government because they wanted the gold and the copper there. Kennedy actually was happy letting Indonesia go a kind of non-aligned route, but the conspiracy theorists would say that the Pentagon and the military, the CIA, had other ideas, and he ended up being killed. So Indonesia is very central. Somebody like Noam Chomsky, as you know, way out there on the left, says the purpose of the Vietnam War, very little to do with Vietnam. It was to demonstrate to Indonesia that if you go communist, we'll destroy your country. And Indonesia, a very important source of gold and copper, and even resources like coal. So far, China has preferred to buy its access to natural resources. And anecdotally, they are building a giant copper mine in Afghanistan. And reports indicated that they paid $1 billion more for that resource than the Canadian or US companies were willing to do. So they will pay. I mean, we've seen them take over Daylight here in Canada, buy into Syncrude. They will pay. Really, money is no object to them when they're thinking decades in advance. But they are spending a lot more on their military. an awful lot more. It's still dwarfed by America's military spending, but they are moving into it rapidly. They're building out their forces. And this is a very worrying development for China's neighbors. Vietnam would like to see the South China Sea renamed, because they say it's not a Chinese sea, it belongs to us as well. And we're going to hear more and more noise about fishing disputes. Lots of islands are in dispute. And Taiwan, we know that there's constant to and fro with them. The Chinese think Taiwan belongs to them, and the Chinese public believes that as well. But even with Japan, there's going to be territorial disputes. There is the first Chinese aircraft carrier. It's a former Soviet, Ukrainian model. Very nice. One careful lady owner. It's outdated, it's ridiculous. You can't put one aircraft carrier out there. It would be a sitting duck without anti-aircraft protection, etc. But the Chinese have their first aircraft carrier. And here's what they're worried about. The Straits of Malacca, in between Singapore, Indonesia and Malaysia, something like 50,000 vessels a year. It's 1,000 vessels a week go through there. Look at the amount of oil. 15 million barrels of oil a day. Remember, the world produces about 85 million, but nothing, a fairly small percentage of that gets put onto ships. A lot of it is consumed internally. 15 million barrels of oil a day flow through there. That's what the Chinese are worried about. They need oil. They need massive quantities of it. So you might say, well, the Chinese, couldn't they just build pipelines? I mean, they're right there on the Eurasian landmass. And this is some stuff I got from the Naval War College in America. And they've been looking at this very closely, because we know that there is, in the Caspian region, huge hydrocarbons. There's an awful lot of jockeying, because the Americans would like those hydrocarbons to go westwards. The Chinese would like it to go eastwards. But couldn't they build pipelines to get around this vulnerability to seaborne oil traffic? Well, they could, but in Pakistan, for example, as they go through Pakistan, this is the Himalayas, of course, so you're getting into the Himalayas over here. The problem there is that, for example, they'd have to go through a 15,000-foot high pass, and you're very vulnerable there to terrorist attacks or local guerrillas. You've got the Pathans. You've got some pretty tough characters in and around here. So the pipeline from Pakistan will be difficult. Couldn't they just take it in across the vast area of Russia? They've been haggling and arguing with the Russians for years about buying oil, because they know that if they direct their whole, the Chinese, if they direct their whole oil importing infrastructure towards Russia, the Russians will have them over a barrel, because the Russians can just hike prices. So that's what their worry is. But the reality is that tanker is the only really attractive way to move oil. You can move it by pipeline, but it's about 4 times as expensive. And train is just a joke. You just can't ship oil by train. So the Chinese are wondering, where are we going to build our strategic reserves? And remember, this part of China is very depressed. And also a lot of Muslims living in this area, a lot of discontent. The Chinese, and that's partly because they just don't have access to energy. So the Chinese have a real dilemma with how they're going to get their energy. Now, the reality is that tankers are fairly invulnerable to attack. You probably remember the Iran-Iraq war. Missiles were fired at tankers. There was disruption, but the system wasn't shut down. So the Chinese will go on with tankers, but it is a worry for them, just securing their oil supplies. And then there's the enormous cost to China, to its physical environment. This is from a website called the Shanghaiist.com, fascinating website. But this is smog over China. Something like 2/3 of their rivers are now just unusable. I'm going to talk about this in a second. A lot of northern China is a desert, basically. The cost of pollution in China is massive. I mean, China is in some ways like the Industrial Revolution in Britain, where an awful lot of northern England was just destroyed, and they're still dealing with the legacy of that. In parts of England, they have collapsing towns because they built mines underneath them. So I haven't talked much about India, and I'm sorry about that, because India is equally fascinating. But here's a chart from The Economist just to show how far China is ahead of India. I won't dwell on all of these, but some of this amazed me. India, in terms of life expectancy, is at only 65. We're at around 80, I believe, in Canada right now. I think women are up to 82, men are around 80. There's China, 73. And so India, the last time China was at that life expectancy was 36 years ago. So I won't dwell on this, but The birth rate in China, we know about the one-child policy. Birth rate in China is only about half of what the Indian birth rate is. And I mean, the fascinating thing about China is they've had the one-child policy now for decades. They are actually looking at a pretty chronic aging problem in China. The dependency ratio is about to start climbing. They actually could face, in some ways, labor shortages in decades to come. Now, right now, they're okay because they've got those cheap rural workers, but they're worried because they've dismantled their welfare state. They're, in some ways, paradoxically, after the reforms came in the 70s, they went along with IMF, Milton Friedman type policies, and they dismantled their welfare state. Most Chinese people have no access to healthcare, no access to state healthcare. I mean, it's really abysmal. Very, very poor social safety net. Of course, traditionally, they do have the extended family, and that's what they've got to rely on right now. Just want to talk, this is my little laser thing. Look at the electricity consumption, much lower in India. And this horrified me. I find this very hard to believe, but it's in The Economist. Of course, they're not infallible. I didn't know the Indian literacy rate was that low, 63%. I mean, that's disgraceful. I mean, that's a huge generalization. India has a massive educated middle class now, but in their hinterland, there is an awful lot of poverty, a lot of deprivation. Just want to look at that, look how far behind the Indians are as well in internet usage. It's only about 1/3 of China. This interested me though. Look, they're almost there with the cars. And of course they have their famous $5,000 car coming out, basically a glorified motorbike, but I kind of like the look of it, you know? I mean, I've got heated seats in my minivan. I don't need heated seats. I don't need power windows. Just make me a simple car that doesn't have that stuff, but that's me anyway. I mean, here's the tragic thing, child mortality at 66. It's not like Afghanistan. Afghanistan, it's just heartbreaking. It's something like 200 per 1,000 kids, but China has made great progress on bringing down the child mortality rate. So here's a bit of a history lesson. China brought in, as I say, I left school in '77, and just around that time, China brought in major market reforms, started dismantling inefficient state institutions, started opening up the coastal regions, notably Guangzhou, Canton, Shenzhen, just the area around Hong Kong, started opening it up to private enterprise. And look how their GDP, which was pretty well the same as India's at that stage, GDP per head, took off. Look how poor China was, though, under Mao, under the nutty policies that they brought in, the Great Leap Forward, let's all build a smelter in our backyard, or the Cultural Revolution, let's destroy cultural artifacts and send professors to work in the fields. But you can see that China, once it got out of that stuff, once Mao Zedong died in 1976, China really started exponentially to take off. India is a different story. They started bringing in their reforms more than 10 years later. Their GDP has taken up, but still well lags China. What is the problem with India? Well, the British left a massive bureaucracy behind when they went, a massive railway system. I mean, the British looted India. There's no doubt about that. The whole culture of the Raj was to suck as much wealth out of India as possible. It was a massive thieving regime, unfortunately. So how has Indian business responded? They built cities, in some cases, that have no government involvement. You can go to the city Gurgaon, it's a suburb of New Delhi, basically. It has 26 shopping malls. You can buy Chanel, Mercedes, BMWs, but don't look for a functioning sewage system, or don't look for reliable electricity, sidewalks. Most of the cops are private security guards. What businesses have to do in India is just build cities without government. And you can see there's people living in these kind of conditions, and then, I think it got cut off here, there's gleaming blocks just behind them. So I want to wrap up the kind of serious part of the presentation just by talking about water. And we've heard a lot about water, how water could be the next cause of wars, the problems that we're going to have, especially in the southwestern United States. I mean, by 2050, the southwestern United States and a lot of the Mediterranean countries could be desert. They could be Saharan-type deserts. And already the Indians and the Chinese and the Pakistanis are dealing with this. I'd like to refer you to some work by this guy, Kenneth Pomeranz. You can Google this, 2009, article he wrote called Great Himalayan Watershed, about the deep problems that these countries, India and China, have with water. This area here is arid, essentially. It gets very little rain. We're talking about less than 20 inches of rain a year. That's about 20 inches of rain. That's about the amount that Phoenix, Arizona gets. And you know Phoenix, Arizona is not exactly a lush place. He wrote this incredible article just about the problem. And in common with a lot of United States, they've been extracting groundwater, and that's not going back. For 40 years now, their growth has been unsustainable, he argues, because they've just been using irreplaceable groundwater. Here's some numbers. 380 people in 80 million people in northern China, that's about a third of the population, have amount of water that's about 1/20th of the global average. This blew me away though. Over half of Pakistan, oh, I'm sorry, I got the Phoenix number wrong. Sorry, Phoenix is down around 8%, but 20 inches of rain is very arid, beg your pardon on that. Only 8% of Pakistan, that's 1/10 of the country, gets 20 inches. That's about the amount that falls in Tel Aviv. And Tel Aviv is a pretty arid place. And only half of Pakistan gets more rain than Phoenix, Arizona. So what can you expect? You'd expect massive water diversion projects. They're basically going to have to dam the rivers in the Himalayas for power and water. Power and water are very, very closely linked. The implications of the dams they're going to have to build, I mean, we're talking about bills of 100 billion and up, will just dwarf. And we think the oil sands are big, and they are massive, but this is just going to dwarf it, and it's going to cause a lot of tension. If you look at rivers like the Indus or the Brahmaputra, they rise in the Tibetan plateau, largely in China. So Pakistan and India are not exactly happy to hear that the Chinese are going to be damming these rivers and then sending the water to northern China, where 400 million people are struggling in desert conditions, and they're running out of the groundwater. Pakistan has serious water problems. Northern India has very serious water problems. And this is going to lead to a lot of tension. It could well lead to war. Oh, sorry, giving you a preview there. Anyway, so that is something to watch. I would highly recommend that article, The Great Himalayan Watershed. Thank you very much.